Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 15th of December 2016, so the Federal Reserve did indeed raise interest rates. I hope some of you guys, if not all of you, were able to take advantage of that situation. Mentioned yesterday buying the dollar CAD would be a good call, so hopefully some of you were able to get on that dollar strength and make some good money yesterday. What we're going to do now is actually have a look at the euro dollar on a weekly chart, slightly different, going up the time compressions. The reason why though is as we wind down for the end of the year and look ahead to 2017, there are definitely problems afoot for the euro. Could even be, dare I say, the end of the euro if the UK definitely get the hard Brexit that people voted for. If the French National Front, Marine Le Pen, win in March, the presidential election, we've had the referenda in Italy. I believe the Dutch are to vote as well. Geert Wilders leading in the polls there, anti-Europe contender for the top job, and of course we've got the German elections. Which will be very interesting. You can't see how the EU continues if German elections were to take a lunge to the right. So very interesting. What you can take from all of that, though, without question, regardless of the fact that we haven't had those results yet, apart from Brexit and the Italian result, is that there's uncertainty in Europe heading into 2017. Possibly, serious issues. So, with that in mind, that creates weakness within the currency. And let's not forget, obviously, last week Mario Draghi came out and extended the QE program. Recently cut interest rates, and then you look at what's just happened in the US. The Fed are now actively on this interest rate hiking cycle. To what degree, how far that can actually go, given the environment that we are in and the uncertainties that still remain, is debatable. They've also suggested there's going to be 3 hikes next year. That seems quite ambitious to me. Given the backdrop of what I've discussed as well. But the fact remains that the Fed raised rates, first major economy to do so since the Great Crash. Not great for Main Street. There won't be too many happy campers in the US today as their mortgage rates go up and the debt that they have to repay has increased. Again, you've got to think of that in terms of US government debt as well. It's absolutely colossal, $20 trillion and counting. So how far they can go before that's a problem, I'm not sure. 3 seems very ambitious to me, given the tumultuous nature of how 2017 can potentially play out. But the bottom line is that the US have raised interest rates. So with that being said, that's why I'm taking a look at this euro dollar on a weekly chart. So it's slightly up the time compressions from what I normally describe. Usually we're talking about dailies and predominantly the 4-hour chart, but this is worth a look because of what I've just said and how I think 2017 is going to play out, certainly from a weak euro perspective, and the dollar is going to be mighty, I imagine, into at least the first quarter and beyond, in honesty, is my ultimate view. But certainly I'm comfortable saying that this pair is going lower in the next quarter for sure. And what we have is a level here of historical support where traders have been trading off this level. So touches once, touches twice, so you got a double bottom there, touches 3 times, you got a triple bottom. As it comes back in, what you can see from this is that it's been touched again and it bounced. And certainly within this wick here, it would have looked very convincing that this was going to head higher, excuse my drawing, to at least the other side of that range, as it had done here and had done here. It would have looked as if that was the play. So this is what I refer to, and I've discussed ad nauseum now in these videos, a trap break pullback that is yet to play out, but this is how it looks at the hard right edge as it's actually attempting to do that. you have price come into the level, it reacts as it would do if you're expecting it to go up, right? You get a nice swing point, then you get this strong candle in the live market that would have been very convincing this was going to go higher. But what's actually happened is it's bounced off the underside of that level, and it's currently trapping those traders in that area there. Let me just highlight that for you. So traders who've gone long expecting this to go at the other end of this range are now trapped and starting to be squeezed. It's not the end of the world for them just yet. They'll have the stops placed below this location, but it's certainly not looking great. So if this drops through this level, which is what we'll anticipate is going to occur given what we just described fundamentally, then this looks like a great place to get short, and maybe something that you can hold for a little bit of time into next year. And any positive dollar news that continues to solidify that position, any future bad news that continues to disrupt Europe, this is just going to add weight to the idea that being short euro dollars is probably going to be very fruitful for 2017. So this is a weekly chart, so bear that in mind, but this is one to watch for sure. And if you'd like to understand more about my trading traps, what we essentially have done over more than a decade of experience trading the FX market is I've essentially identified what most traders do, right? The behavior that they undertake every time they look to take a trade. We've sort of deconstructed that, we've reverse engineered it, we've hacked into their strategies. So when you take a trade off a level of support or resistance, or any other type of trade that exists, literally we can see when you do that, and then we look to see when you become pressured in that scenario, and then we take the other side of your trade. So we've hacked all these very common typical trading strategies that exist, so that we're always actively on the other side of that. And if you'd like to learn how to position yourself to be in that position, so that you're always going to be on the side of the market where the actual edge is present, where people are losing money, getting squeezed, there's order flow working in your favor, etc. Doesn't mean you win every trade, but it does mean that you have an edge that's evergreen. Then please click the button below, join me in today's live trading. I'd love to see you there. Take care and have a nice day.